Strategic Day Trader, and this is your market wrap for May 14th, 2019. Qs gapped up, gonna close here about 1.1%, SPY 0.9%. Okay, so we did say yesterday, while the market is bearish, not a good time to initiate shorts. We need to wait for a setup. Okay, and today, actually, only in the afternoon here, we actually got it. Okay, which is we get the rally, the retracement, and then a break of a previous bar's low. Okay, so triggered right there on the SPY and triggered right there on the Qs. Now, if you recall, we had a very similar setup here, triggered there. Okay, so we're not going to do anything different. We're bearish until proven otherwise. And what would the market have to do to show us that it in fact does not want to continue the downtrend? Okay, over 185.41 was the previous time, so that was the pivot. So to now that we've gotten this pivot, the change that we will make where we will no longer be bearish is over 180.163 on the Qs and over 285.10 on the SPY. Okay, so over today's high on the SPY, over today's high on the Qs, no longer bearish. We will go to a neutral bias and see if we get another setup. Okay, so we're just following along this hourly downtrend. Now, I know we are a little bit more volatile than we have been this year. News could happen, right? And so we could get some kind of gap in the morning, if not tomorrow, the next day, at any point in this week, because of kind of the negotiations going on and the back and forth and things like that. But that's nothing new. We prepare for potential volatility each and every day, right? And we know where we would change our current bias, right? And for now, going into tomorrow, bearish bias on the Qs and SPY. So we'll see if it's as easy to read as it was last week. Okay. Speaking of last week, going into Friday or on Friday, I said that we were getting a lot of good gap bullies and gap berries, and you'll get to see what they look like. And so that was kind of suggesting to me that we were going to get more and that the follow through was good on these and that the shock value that they were creating was good. So here is what a bully looks like. Okay, so gap bully here, gaps down, and then breaks through resistance. Okay, and the expectation is that we will be pretty much bullish for the rest of the day. We'll probably close as a pretty decent sized green bar. So you just want to wait, get an entry once it breaks resistance, okay, and then ride it up. Okay, so the better they are, if they go from one side of the 20 MA to the other, right? If they break the support here and then break through resistance on the other side, so it's a pretty significant reversal there. So it's really a reversal of the gap, so much so that it actually breaks through daily resistance prior to the gap. Okay, SPWR also bullied the gap, gap down, and then broke through the resistance there. OMER gap down, broke through the resistance, and then broke through the support, and then traded through the resistance. Right, so OMER, another one you would expect, closed somewhere near the highs. Market had a big bottoming tail on this day that helped some of these get follow through. But MTW, now these would be the berries, which is what we played today. So they gap up. This one actually gapped up to resistance and quite clear it, but did trade through the support, and so did the JAG gap up, and then they sell off. So the impact of these is that those that were long this, thinking that today we're going to get really nice follow through, we're gapping up, see their profit disappear, usually happens almost instantly at the open. I'll show you the BEST opening bar. And so then they're kind of forced to make a quick decision, right? Or potentially watch that profit turn negative. Anyone who was short thinking this is going lower and sees this gap might be getting out at the open or getting out as soon as it sells off a little bit and thinking they avoided disaster, only to see that they're missing out on profit now. So it serves to disappoint the longs, the people who thought they had a gap in their favor, and shake out the people who it's gapping against. So what we had today was the BEST. Okay, so it was gapping up. Initially, you can imagine anyone trapped short might be thinking, oh, I better get out of this. And then if they do, they have to get back in. And then anyone who was in this long thinking, I got a good play on my hands, saw that profit disappear very, very quickly, right? So now I think maybe the biggest downside to this is that a big move does have to be made for this gap to reverse. So what I prefer is to see some kind of retracement. Okay, so once it comes in and you get the bounce, the retracement, that sets up the sell setup. That's my preferred entry for these because the move has already been made. I don't know how much more is going to go. My expectation is that they'll probably close at the lows. Okay, if not, but I don't know if it's going to make new lows and then close at the lows. But my expectation is that we should close at the lows. So I just want to find a good entry point. Okay, and so on the BEST, that's what we got. Okay, so you can see came in and then got the bounce, got the retracement. Okay, low of this bar here was 508, and the top of this bar was 514. I rounded up to 515. Okay, and this is just your standard sell setup. Sell setup is 3 or more green bars, 3 or more higher lows, 3 or more, and preferably higher highs as well, in the context of something weak. Okay, so you're playing a retracement play essentially. Okay, triggered right there. As you can see, target 1 was back to where it got the nice bounce started. So 595. Okay, and so then as it came in, we trailed half to the penny. I think some trailed out over 96. And then we trailed another piece as it got even closer and got to 490. Okay, on the BEST. And then kind of just hung with it for the rest of the afternoon. Lowered the stop. If you were in the room, you saw just BEST, lower stop to to 505. And then later, once this bar was finished forming, lower the stop to 5. And then lower the stop to 497. And then eventually it did break over 497. And that's where we got out. So that last piece, we were in it all day. Didn't really add much. The first 2 exits were better. But you never know. This was staying weak. Market was in an uptrend all day. So it's the kind of thing I want to be in all day if I can, until it proves to me that it doesn't want to go any lower, right? Market was kind of staying strong, finally put in this rounded top and triggered our hourly sell setup. But the best I liked a lot. We also had the IMMR, which Sammy had a call on, the IMMR in the morning breakdown again. You can see a good gap up that got sold, buried the gap. Didn't quite clear the resistance. Would have been, I think, a little bit more impactful if it had gapped up and then cleared the resistance. Of course, would be an even bigger bar, but you can see something like this typically will close at the lows. So, it's the kind of thing that knowing that I'm not going to capture all the move, or even on average, not even majority of the move, right? You could look at these bars and say, well, I'm going to play it off the bottom and catch, the retracement play. Fine. I mean, if you can be pretty precise with it, and that's what's going to be needed for you to make this work. But when I look at these bars, that tells me that the easier play or the higher odds that I actually take a trade that works is to play it short. So that's why on these, even though they get sold a lot, even though they're already down a lot, these typically close weak, and so that's why I want to find a way into them, because that affords me the most kind of room for error. Even if I don't get the target exactly right, that can still come out on top. Okay, so hopefully we get more of these. This was the most accurate strategy from 2017. I didn't see as many last year that I liked. And pro gaps really were the moneymaker, not the gap reversals. But I've been seeing more of them in the last couple weeks, so I'm fine with playing them. And that's one of the major benefits of being in the room, is that get to gauge kind of what strategies are working, get a good full understanding of what's out there and what's working. So I thought that was a pretty nice, easy play on the best. Trading, I would never say is easy in itself, but sometimes you do get easy plays, and the market is easy to read. But not too bad on the best. Okay? That's going to do it for today's market wrap. We'll see what the market brings us tomorrow. It is a strong retracement on the hourly sell, but it is an hourly sell. Okay, so I kind of made that distinction in the room. While this is setting a setup for a short, it's not necessarily a good one, not one that I would play myself, but it is a setup and it is telling us lower. So I will take the pattern as it is. And so going into tomorrow, market bias will be lower. Okay. All right. Hope you did well today. If not, we'll be back at it tomorrow and I will talk to you then. All right. Have a good evening.